On today's show, 3 questions. Number 1, are you ready for more market noise? Number 2, is your New Year's resolution dead already? And number 3, what are you not focusing on this year? Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Jordan.
And I'm Rabih.
Yeah, you are. Happy New Year, guys. And who's this Jordan guy? Welcome, Jordan, to the team.
Yeah, definitely not the best looking person here, but I'm excited to join you guys.
You know, I've always been told I have a face for radio, so I think I was destined to do this. So maybe you can join the ranks of the face for radio, guys. You have a voice for radio. I know that.
There it is. Yeah, I got the voice, not the face. So that'll be my strength here.
That's all of us. That's all of us.
It's a podcast.
It's perfect. It's perfect. Happy New Year's, everybody. This is our first 2 cents of 2025. Rabih, how you feeling?
Great, excited. I love when a new year starts. It's an opportunity to reset and forget that you made mistakes and just think that you're going to be perfect in the next year.
You're forgetting that you made mistakes. I definitely have not, but I need to work on that. I like that. It's a reset. I like this. Okay, well, let's jump in. Rabih, first question, are you ready for more market noise? Tell us what's going on with the markets.
Yes, well, the year has started on like rough waves. While we're going to get into what's been happening in the markets in 2025, where we're going from there, I think it's a really good opportunity to just look at how the market did in all of 2024 and see what the best investment was and where the noise came from. So I prepared a bunch of data for you guys that will lead us into what the major themes of 2025 we think they're going to be and how the market is going to react and what is the base case scenario and how will that change and how will expectation change as new information starts coming into the market. So are you guys ready?
Do it.
Ready.
All right. So I got the first piece of data I got was, an asset class performance metric. What do you think was the best performing asset class? You guys have the data, so don't cheat. Really,
I don't.
What do you guys think was the best asset class for 2024? We've got gold, we've got US developed, emerging, and we've got bonds between these.
I think between those,
Yeah.
I think it's US, I don't know how specific one to get, but US growth stocks.
Okay. Jordan, any guess?
I think I'd go with Matt on this one. That would be my guess.
You guys are pretty close. So US actually outperformed all the other equity and bond asset classes, but gold was actually the highest performance for
there
the
it is.
And
dang it, Rabih, why didn't you tell me to invest in it?
So close.
We'll get to that in a second for why, but just to give you some reference, the lowest performance was actually intermediate duration bonds at like 1.3% because interest rates have been volatile. The best performer was gold with like a 28% for the year. And then we've got the US measured by like the Russell 3000 at around 23.5, 24 for the year, which are really remarkable years. But gold, gold doesn't track a company with earnings, etc. So it was more supply and demand. And we've covered it multiple times on the podcast in 2024. There has been a shift, especially due to China's struggle to get out of its recessionary environment to hoard gold, whether it was from its public or from the Chinese central bank in anticipation of the new geopolitical tensions that might be coming up in the next 4 years between the US and China. If a trade war comes in, you need gold to be able to support your currency, etc. So gold was there, but not for a fundamental reason as much as it is supply and demand. The next thing I wanted to talk about was within the US. And Matt, you said probably large cap growth. That would be tech in the US. I've got a list of all the sectors. And what sector do you think was the worst and which sector do you think was the best? Based on like what we've heard in 2024 and not like that.
I want to go first.
Yeah,
I
go ahead,
think it's
Jordan.
real estate. Is it real estate?
Real estate was the worst for you or best for you?
Worst. I'm going with worst.
Fair assumption, because real estate in 2024 is like interest rates are high, mortgages were at like 7%, and the demand is lower. Makes sense.
I'd say utilities did the worst.
Utilities, because it was a
growth year.
The
And
narrative
I think
for that is that the market has been growing, and those are the least sensitive, and they don't budge. So in a good year, they might be the ones that underperform the most.
the two I'm debating between would be utilities or healthcare. or like consumer staples. And then on the good side, I'd say the best was probably tech.
Okay. Well, let's start with the worst performer. So the worst performer was actually materials. So we are talking about companies like gold miner would be a material, which is very funny because gold as an asset class did really well. But material like miners and refineries, etc., did the worst. Coming second from the bottom is healthcare at 0.73. And then we've got real estate at 3.16. So Jordan, you got there, but it wasn't
I was close.
Most underperforming asset class. In terms of the most performing asset class, actually technology ranks 4 out of the 11 sectors in the S&P 500.
I didn't even go top 3? I didn't even get top 3? Dang it.
We've got communication, which also falls under large cap growth. So I'll give you that. We've got communication at 36% for the year. The second was financials with 29%/30% for the year.
Dentist Advisors really carried that load. Yeah,
that's right.
Yeah, it's all
carried
us,
the financial sector. Yeah.
But, when you're in a year when the Federal Reserve is cutting interest rates, that is a very healthy sign. And the fact that the yield curve started steepening again, we got out of the inverted yield rate environment, that is just easier business for the financial sector in terms of the lending and the duration they take when they're lending, which was reflected in the stock prices in anticipation of, good years coming forward. And then we've got consumer discretionary and utilities. Guess what's and technology? Guess who is right after technology in 5th place now? Utilities.
No, so they're on the high end. Wait, so Rabih, give me the rationale, give me the reasoning behind that, where utilities did well.
Well, utilities are I'll get you this subsector next week because I don't have it. But in utilities, the biggest one we have is energy, right?
Got it. Okay.
And this year, oil price, like gas prices, compared to the previous 2 years that we've had, have actually, oil prices have been lower. It was an election year, and it was an opportunity, and demand was strong. Remember that. And people, when demand is high, there's a lot of business in a sense. It was just driven by the business cycle rather than a shock that, like in previous years, when COVID happened, utilities were down simply because people were just at home and not really utilizing as much electricity as they want or as much, access to gas stations as they want, etc. This year, the demand was high, and that is reflected by us running the infrastructure. We have been wanting to use the infrastructure, whether it was power companies, electricity companies, water companies, and stuff related to energy. So that was with the sectors. Now we want to move to actually the more interesting part, the part that is not all roses, like equities, because equities had a good run. We said bonds were the least performers, but there's something very interesting about what was happening in bonds. So we moved to the US bonds, and we're just going to talk about the yield curve. We started the yield curve with an inversion, right? And it was the longest inversion in history we've had, especially between like the 10-year and the 3-month treasury bills. And the way rates move throughout the year is actually interesting. Throughout the year, without giving you like the actual numbers, we've got the 1-year and 2-year interest rates drop from the beginning of 2024 till the end of 24. But all the rest, so we're looking at the 3-year, 5-year, 7, 10, all the way to 30-year yields, they actually increased. So we started a year where we're saying, the Federal Reserve has paused increasing interest rates. Throughout the year, at some point, they will be cutting interest rates. They cut interest rates full 1 percentage point this year. But all the yields from 3 years and above actually increased in 2024. This is what we call a bear steepener. We've talked about it, where the yield curve steepens because long-term yields are going up. And again, this is somehow related to expectations of what the next macroeconomic environment is going to be. Higher long-term interest rates are indicator of either higher growth or higher
inflation.
So we'll see which pans out. It is just higher interest rates in the future. Will those be real or nominal? Because they were hit by inflation. It's still up to us to see. But it is interesting when we say, for sure the Federal Reserve is cutting interest rates this year. Bonds should do well. Well, bonds didn't really do well because all those longer maturities increased. Just tells you to how random it is. With the fact that interest rates were increasing in the US rather than decreasing, this reflects a stronger US dollar. Because when interest rates are higher in the US, foreign investors would rather put their money in US treasuries and get a higher risk-free rate than they would, investing in Euro bonds or European bonds in a sense, where the real risk-free interest rate might be lower. The US dollar actually appreciated a lot vis-a-vis other currencies. So it appreciated 6% against the US dollar, 10% against the yen, and around 8% against the Canadian dollar, which is reflected for why the US had an outperformance over developed markets in terms of the asset class, if we look at it from the perspective of a US investor. So the fact that, going back to the data, we had developed markets ending the year around 3.5%, but US at 23 is not only because of the equity returns in those developed markets, but also due to the effect of the currency. But academic research has shown us that currency fluctuation on the long term tends to mean revert and cancel each other out. So it's just part of the swings that you experience in a globally diversified portfolio being in the market.
Hey, Rabih, can we just do one other, just to back up a little bit on the yield curve? And we've said this before, but I think these things bear repeating because I think the studies show it takes 7 times to hear the same thing for it to resonate. I really do, that is actually true. For me, it's but I want to repeat this and this point when you talk about, because I want to talk about how this actually applies to a dentist out there in real life. And I think when you talk about the yield curve and the Fed and all that, I think it gets really, really confusing for a lot of people. Again, just to emphasize, because I have an email that comes in once a month about where mortgage rates are. And I just want to reemphasize this. When we talk about the yield curve and we talk about the Fed versus 10 years and all this, the reason, and I get questions on this, when rates on the low end, the Fed, what they control being the Fed funds rate at the very short end of the curve, people are asking, well, why am I not seeing this reflected in things like mortgage rates, car rates, whatever it may be? Again, to emphasize this, it's because the Fed does not control those rates. The Fed is not controlling. Those are more based on supply and demand dynamics, Rabih, that you're highlighting here, right? At the mid to long end of the curve. Yes. Anything else you'd add on that?
Yeah, actually, the framework is very intuitive, how rates move once we understand the framework. Think of a circle, a point that's surrounded by circles that keep widening. So it's more of a funnel. So you've got a circle in the center, and then a point in the center, and then circles are around it. The Federal Reserve is only the point in the middle, and the Federal Reserve only controls the rate at which it is willing to lend other banks. That's it. So if you want that rate, the Federal Reserve, to trickle outwards towards all the other circles, you would want to look at the dynamics of how the banks are doing business. So the second next the closest circle around that point would be what the banks are deciding to lend each other. But then you go a circle outwards, it would be what are the banks willing to give you for your high yield savings account, right? The Fed might change stuff, but in their second degree circle, they might decide on how much they want to give you based on what makes sense to their business. And you go a circle beyond that, and you would be looking at what is the rate that banks are willing to lend you for your mortgage or your credit card or auto loan or student loans, in a sense that would make them business. So while the rate that the Federal Reserve controls is very important, it's at the center of this interest rate universe, what determines that end rate that the consumer feels and interacts with depends on how banks are willing to do business.
Yeah, that's great. Jordan, any thoughts on that?
I've got nothing to add. Rabih did a great job explaining that. I think that's fantastic.
Welcome to my life with Rabih. It's just cool, great. This is perfect. Okay, Rabih, thanks for doing that.
No worries. Okay, so this brings us to 2025 and where we think 2025 is going to put us. And I actually pulled up the Federal Fed funds rate future, the Fed funds rate future, not to repeat myself, which are the futures on what the futures market, on what the market participants think the interest rate decided by the Federal Reserve is going to be. The Federal Reserve has communicated, especially lately in the December Summary of Economic Projections, that they are only expecting to cut interest rates twice this year. And we were thinking, so when? Are we going to see one in January and then one in March and then they won't cut interest rates? Will it be 2 in September and November? What it's going to look like? So reaching out to the Fed funds futures market, we see, based on how futures are priced, that the market is expecting that there won't be any cut from now until June, we'll see the first cut in June at 25 basis points. This is what the market is pricing in right now. And we'll see the second cut in December. So we're going to get a 25 basis point cut every 6 months for 2025, which is wild. Actually, the probability of them not cutting rates at the end of January in 2 weeks is actually around like 98%. Like the market is pretty sure that the Federal Reserve is not going to be cutting interest rates. So to look at the Fed funds rate futures market, to see when the market anticipates that the cuts are going to be happening, looking at the data, and this is like what the market is pricing in right now, we can see that they're expecting that no cuts are going to be happening until June. We'll see the first quarter percentage point cut happening in June, and then nothing until December, where they do another 25 basis point cut. So we're going to kind of have 6 months of no cut, 0.25% cut, 6 months no cut, and then in December, the last 25, which is wild. Actually, if you look at the probability of a rate cut happening in January 29, which the Fed meeting this year in 2 weeks, they have like a 98% probability of no cut. So the market is already pricing in a stronger macroeconomic environment where the Fed has to slow their pace of interest rate cuts for them to stick the soft landing and have this recalibration of theirs go to according to plan. So
if I'm Jay Powell, I just troll everybody and I make the cut anyway.
Dude, the market would love it, especially
why not?
Just why not?
Why not? But because this comes in line with the market data we have received in 2025 so far. So I don't know if you've seen, but the market, looking at the S&P 500, we're only like around 4% below all-time high, and it's been going down. There's a little bit of swings, like on a daily volume level, and it has been coming from 3 main sources. The main source was the Fed meeting minutes that were released earlier this week about the December meeting. And there were some sentences there saying that the members of the Open Market Committee at the Fed are expressing some worries that the new administration, with their economic policy of adding tariffs, might be inflationary. So for them not to be overdoing it by having an inflationary policy along with continuation of interest rate cuts, they were more on the side of caution of slowing down the rate cuts. That's one. The second data point that we received was also this week, where we got job openings. We were expecting the job openings in the economy to be around 7.7 million. The number surprised, and it came, which is in line with like the previous month. It was 7.7 million in November. They expected 7.6 million in December. The number came in at 8.1. So now we have more jobs. Like we added so much jobs in December, which is inflationary in nature. And the third thing that came up this morning was the unemployment numbers. We got more payrolls than we expected for December, and the unemployment rate ticked down from 4.2 to 4.1. So all of these are actually indicators that the economy is actually strong, right? But when you are at the edge of equilibrium, where if you get tipped, you're in an inflationary zone, it is bad news for the markets, and the equity markets have been reacting it. But it's also not a big deal where it prompts anyone to worry about their investment strategy. Those are the market noise of 2025. We're starting at that pace. So we'll see how it goes. Inflationary pressure of policy is going to be a big theme in 2025, unless something new happens, especially geopolitically. We've got conversation with this inflation pressure. We have a conversation about a stronger dollar. We've got definitely conversations about the deficit that be coming up, especially that there's now a department or administration of government efficiency related to trying to fix that problem. So people would want to judge the performance of it. We're going to have trade war talk. We're going to have more Bitcoin talk, which is coming up. We're going to have the impact of AI. And we're going to see China's weakness economically, whether this is going to continue to translate to higher gold prices. So all of these are what we have as baggage coming in 2025. While it could be worse, we're coming into a new year on really strong foot with a very healthy, strong economy, probably the best in the world currently. you've got some baggage, and as the market prices in information about it and how we're going to find an exit out of them or not have an exit out of them will actually be reflected in the markets.
Love it, Rabih. I think the key word here is noise, right? This is all noise. And we, as we say on the intro of this show, navigating the noise. I got asked on another podcast I was doing, being interviewed. The person asked, what should people be out there doing with the new administration, like with their portfolio? And I said, absolutely nothing. You should never make moves on exterior events or things that are happening in the markets. But we it's good to stay informed. We like it staying informed. Can I drop a little nugget, Rabih, and be you for a second and bring some data on the markets?
Absolutely.
I got a little something for you as we enter a new year. I posted this in our Facebook group, but I think this is worth noting. That 2024 closed out the year 25% on the S&P 500. That was the second year in a row we've had a 20% plus increase in the S&P. That's only the 8th time it's happened since 1950. And the most recent time that it happened was almost 30 years ago, 97, 98. So the question is, are we in for another big year? What does data show us? In all of those times that it's happened, in year 3, the market return is about average positive 12%. So boom, Rabih. Boom, Rabih. Take that, Rabih.
Yeah. What are you going to do, Rabih?
What are you going to do, Rabih?
This just tells you that the return from one year to another is independent, just like a coin flip is independent. If you're gonna get 2 tails in 1 year, in 2 consecutive tosses, the probability of getting a tail in the 3rd year is still 50%. This is what the market's telling us.
Well, I think the other thing too, Rabih, that I think people need to realize is that returns come in bunches. We've talked about this, right? The positive returns come in bunches. And this isn't that crazy to see, right? We're in 2 years of a bull market right now since the October
increasing
of 2020.
Interest rates in 2022.
Yeah, in 2022 was the bottom. The average bull market lasts about 5 years. So to say we're going to see 3 more years of good market returns, it's not crazy to say. But I think the sentiment out there is like, oh man, what goes up must come down, like it's going to crash. It's like, yeah, it will at some point, but it's not crazy to say, even though we've had 2 amazing years, it is not crazy to say, we got another few years of this. Like that would be pretty average because these returns come in bunches. Bull markets last about 5 years. It's like 1,866 days. We're only halfway through that. So to say we're going to see another good year to this year, next year, like that's not that crazy. So
especially that the economy is growing. Like had the economy been going sideways for the last 2 years, you'd say, yeah, you would expect some mean reversion because we didn't really change the terrain we're working on. But the terrain has been changing. The economy has moved to new equilibriums, and prices should reflect that.
Yeah. So is now a good time to invest? Yes, always.
Always.
Okay, Jordan, anything else you want to add on any of that?
Yeah, I just always what comes to mind when I'm thinking about all the news and the things that are happening is just focus on the things that I can control and ignore the things that I can't, right? Like when you asked earlier, what does this mean for me, the dentist or person listening to this? Nothing, right? Like keep doing the things that you need to do, control the things that you can control, invest. It's a great time to do it.
Yep. Love it. Love it. Okay, Rabih, as always, love the market recap. Number 2 question, is your New Year's resolution dead already? I want to ask you guys, are you near New Year's resolution makers?
Not really.
Jordan
No.
says big no. Tell me why. What's your just give me your thoughts on this.
Yeah, I'll tell you mine. Mine actually started 3 years ago for a bad reason, and now I hope that it's good. I have learned about myself, I have a strong aversion to lines. Like I hate waiting. I don't like waiting in lines. I don't love like going to a place that's crowded. So I go to the gym at the beginning of the year and all the people are there and I'm like, this is so frustrating. I don't want to wait for a machine. And I'm like, I'm done with New Year's resolutions. This was like 3 or 4 years ago is when I did this. And I actually have like slowly started to be like, maybe once a quarter, I'll think about something new I'm going to work on. And anyway, that's my story arc. That's my how I became who I am, is not wanting to wait in lines.
I like this. Rabih, what about you?
This might not come as a surprise to you guys because you know me, but like I'm very like obsessive about stuff. So when something is bothering me, I fix it immediately. I cannot wait until the new year starts. So,
yeah, I'm with you guys. I used to be more of a resolutions guy. I've kind of fallen off. I don't have much of a story arc necessarily, other than just I find it as I've gotten older. I have found it interesting that we and I get why, but I found it interesting how we look at life in these like year to year, kind of like section to section parts of our life. Like, I guess I've just realized, this is the main thing for me that I've realized and been honest with myself, is that I'm the same person as I was on December 31st. Like, December or January 1st makes me no different of a person. And the data actually, and so, okay, so I kind of stopped setting resolutions. I tried to shift my mindset to just like kind of, Rabih, what you're saying, kind of like just ongoing habits and systems and keep working as I go, but not worrying about year to year what that means. And I think one of the biggest issue with resolutions is they are the epitome of outcome focused goals. And I think outcome focused goals are completely flawed. And the data backs this up. So I wanted to give some data. This will be pretty quick. We've actually hit this on years past on shows and stuff. But the data shows that most people, for lack of a better way of saying this, guys, I'm just going to be really forward. Most people suck at sticking to resolutions. Sticking to resolutions. They're really, really bad at it. And again, I think it's flawed. I think the part of it is not the people. It's not people's problem or fault. It's the system's fault. It's what society has accepted as like what you should be doing to like get better. And so just some data here. There was a 2016 study that's become pretty popular, quoted quite a bit, that only about 9% of Americans successfully complete their resolutions. That was in 2016. There was a more recent poll done by a university in 2023 that found only about 6% of people actually complete the resolution at the end or till the end. A breakdown of these, it gets even worse as you look at the actual breakdown. Only 8% of people maintain resolutions for a month, for even 1 month. Let's see. There's like a ton of numbers getting thrown out here. I want to go down to this one. Another poll, Baylor College of Medicine reports 88% of people fail. So they actually have a little bit of a higher success rate, about 12%. And that 23% of people quit their resolution in the first week. 43% of people quit by the end of January. So the data is pretty overwhelming. People just don't stick to resolutions. So I want to ask.
Do we know why?
Yeah, so they actually break down. They give some reasons why. Key reasons for failures. Number 1, unrealistic goals. Number 2, lack of progress tracking. And then number 3, forgetting about the resolution, which I think is hilarious. It's like, I didn't lose weight this year because I forgot that I wanted to. I want to get first your reaction to the data, if you guys have thoughts.
I want to add one more. I am more and more convinced that we set resolutions that don't matter to us. I would say that's one of the big reasons, right? Like, if I forget something, it's just because it doesn't matter to me, right?
It's not a priority.
It's not a priority, right? And so I think like, okay, when you think about, some people listening to this are like, yeah, I'm a huge resolution person. Like, I'm a big goal guy. Like, I like getting things done. Sure, that's great. But make sure you set the things that actually matter to you. There's been so many goals that I set that I call it, I'm shoulding myself. Like, I should do this, right?
I literally,
Yeah, like I should do this. And then I like get into it. I'm like, no, I shouldn't. This is terrible. Like, I hate this. I don't want to do this anymore. So think about those things before you jump in. That was my initial thought.
Jordan, I love that. I've been saying that a lot more lately, of this whole idea of like shoulding yourself, of saying,
everyone listening to this on 2x speed is going to be like, what are you talking about?
What did they just say? But I think so many people, including me, by the way, have set goals or tried to do things because other people, society, social media, friends, whatever, have told me I should care about this. But do you actually care about it? Is it what defines you and your values and what you actually want to do with your life? I think that is one of the biggest issues people face and one of the hardest things to do. Let's get all philosophical. What does Socrates say? Know thyself. Number one thing of all of life is know thyself. And I think that goes back thousands of years for a reason. And it comes back to this exact thing is, are you doing it because someone told you you should care about it? Or do you actually care about it? Jordan, I think that is such good insight. Rabih, let's get your thoughts.
The way I think of it, the fact that Earth rotated around the sun for 365 days is not a motivator for me. Usually motivation comes out of like a big desire or just escaping a pain. Like, this is how I roll, right? So I'm not going to create a new habit or change my behavior just because, a new year started. It has to be like, I'm feeling terrible about something, or I really want to be something else. It has to come naturally. It has to come from within. It doesn't have to come from the fact that, oh, everyone is deciding that today we start a new year. Like it doesn't click.
I'm with you, Rabih. Totally. Go ahead, Jordan.
Yeah, I'll say that I have a tendency, so I'm probably the opposite of you, Rabih, where it's like, when I see a need, my initial reaction is like, okay, I'll start that on Monday. Like I'm a Monday resolution guy, like constantly. I'm like halfway through the week, I'm like, you know what? I'm not going to work out this week. I'm just going to start fresh on Monday. Like I'm always like a start fresh kind of guy, but it's taken a long time for me to create the system to be able to just like jump in and do it. Yeah, that was my thoughts there. One other thought that came to mind as well, you were saying this earlier, Matt. I think sometimes we look at us not sticking to our resolutions as like a flaw. And my theme of 2024 for my life personally has been a flaw is just a strength in the wrong place, right? So my ability to not stick to things is not necessarily because I suck. We said it again. Look at that. It's because maybe I get distracted on things that might be more important to me. And that's not a bad thing. You know, maybe that's the area that I should go in. So that was one thing that came to mind as well.
I think that's such good insight, Jordan, that we put too much pressure on ourselves to think this is binary success or failure. And just, I love this insight of just, what did you say? A flaw is just a strength in the
flaw
wrong
is
place.
Just a strength in the wrong place.
Yeah, I think that's great. And I think by having that mindset instead of this like success failure mindset of goals, this is why I think traditional goal setting methodology is really flawed, is because you set yourself up for this success or failure. And whether or not you succeed or fail at a goal, quote unquote, your life doesn't change long term much. I mean, this is why we could spend so much time talking about this, but just go read Atomic Habits by James Clear. There's a reason why that book is number one on Amazon for the last 5 years. Like the way he portrays this around like, and it's Jordan, it's what you're saying around kind of having more identity-based goals, more like who do you want to be? And then set habits that are votes for that person every single day. Like that's way more of I think a practical application of this than like this New Year's resolution. Rabih, to your point, the earth just happened to go around the sun, so now I'm a different person. It's just, I think it's very, very flawed. Rabih, any final thoughts on this topic?
Actually, something came to mind, and to tie it to the previous section where we talk about the market, it's like how our New Year's resolutions are usually to be more active about something. Like even in the negative sense, it's like quit smoking or quit fast food or whatever it is. But it is, the resolution comes as like, I need to take an action that stops something from happening, which is probably like sitting at home, etc. While in the markets, like if you try to apply New York resolutions to the markets, it's like very funny to me. It's like this year in 2025, I promise to not look at my brokerage account every single day. Or in this year in 2025,
actually probably would help people.
Honestly. And this just tells us about the difference between how our brain works and how we view progress in life and improvement reflected in a New Year resolution, and what progress and wealth growth in a financial system means. It's completely different game. This is where my brain went. Like, they are two different worlds. On one hand, we struggle with living in our own psychology of being humans and trying to improve our own selves every single day. But we also struggle with trying to live in a financial system where the rules to winning are completely unhuman. And I just find it fascinating because it's like a double-edged sword. It's like, where can we excel? Like, where can we make it work?
Love it. Jordan, any final words?
You got it. No, that's perfect. Good summary.
Perfect. Okay. Let's jump to the last question here. Jordan, this is yours. What are you not focusing on this year?
All right. I have a couple things. For sake of time, I'm not going to spend too much time on this, but I had an article that I wanted to share today. And then as I was reading through some things this morning, I came across an article with just a fantastic headline. And I was like, ooh, this is going to be fun. So let me read it. It has a point, I promise. We'll come full circle. Here's the article headline. Man denied chance to find $700 million Bitcoin fortune tossed in the trash by X. Just the greatest. Isn't that just a great headline? So let me read a little bit.
Headline.
Yeah, let me read a little bit from the article. It's a lot of fun. A court ruled against a man Thursday who has been trying to force local government to allow him to access a landfill to search for digital assets worth around $700 million. The fortune is on a hard drive that was tossed in the trash by his ex-partner a decade ago. James Howells is the name of the guy, had 8,000 Bitcoin stored and says a bag containing the hard drive was discarded by his ex by mistake. But despite the long time since the incident, he says that he still owns the property and should be granted permission to retrieve it. There's a lot that goes into this. You guys can go research it.
Wow.
This was so timely for me because, Matt, you've heard me talk about this a lot lately. I've been thinking a lot about trade-offs, right? Like every decision we make has a trade-off. Nothing's perfect, right? And it's really interesting. The more we talk to people who ask us like, what's your investment return? Like, what's the highest return you can get me? I'm like, well, are you ignoring everything else that goes into that? Like, what are the trade-offs for high investment returns or different assets that you invest in or whatever it is? What's the trade-offs for Bitcoin? It could end up in the trash in a landfill someday, right? Like everything has a trade-off. And one of the ways that I've been reviewing trade-offs in my own life is to decide or choose what I intentionally don't want to focus on. And so this is where I'm going to throw a quote from someone before he was like the most polarizing figure on the planet. And the name of the figure who we all know is Donald Trump. But he said back in his business days, I actually really like this quote. Sometimes your best investments are the ones you don't make. And so it's caused me this year, my resolution. I know that I don't do a ton of resolutions, but one of the things I've been thinking about recently are like, what are the things this year or over the next little bit that I'm choosing not to invest in? I'm choosing not to get better at, or I'm choosing not to improve. That's, I think, one of the best ways we can review what our trade-offs are. What are we choosing not to do? What do you guys think?
I love so much about this, Rabih. I'm going to give you any thoughts or let you have a word on this if you have any.
I'm still thinking. My brain went into how does the weather affect destroying the hard drive? Like this is the Google search happening in my mind.
Get that thing.
The chances of that hard drive. Yeah, but there's 10 years. There's no way he's finding that thing.
See, listen, we don't do treasure hunting for gold anymore. We treasure hunt for lost Bitcoin. That's what we look for now.
Hard
exactly.
drives.
Yeah.
No, but in all seriousness, thinking about stuff that you should not worry about just comes back to the ideas, like especially here living in the U.S. This is a joke. I'm just going to give you some international perspectives. Like there's the joke that Americans like to control everything. They control the humidity in their house, their temperature in the house. They want to make sure that they have a driveway and a garage and everything around them. And this is more of a European perspective. But it's like just be swayed and lean left and right with the outside forces that affect you, whether it's like the weather or the fact that you're getting older and you don't need Ozempic every single day. Like all of these stuff.
Hot take.
Yeah, hot takes. But the idea is, and like this is where it's stemming from, the best stuff that you should not worry about controlling are the stuff that happen naturally. And it's just about, I don't know, becoming richer is also one of them because you need time for compound interest to happen. So the stuff that gives you anxiety when you try to control are the stuff that you should not worry about controlling and like forget about them in my perspective.
Yeah, it's so good. I mean, this topic I think is a bigger conversation. We could probably have multiple parts too. So I love that, Jordan. We should really just put this on our list and make this a bigger conversation. But I love this idea, first of all, of trade-offs. I've been telling this to clients for a long time. In my personal life, it's taken me a long time through mistakes and just a journey through life to realize that like I don't even believe in solutions. Like there are only trade-offs. Every single thing that happens is just a trade-off, especially when it comes to money, investing, all this kind of stuff. So I love that. And then this idea, how this pertains to dentists specifically, the first thing I thought of, Jordan, is like this idea of building wealth for a dentist and this idea of like, what are you not going to do? How about just a thought? What you're not going to do this year is try to track down a side hustle or some other stream of income. How about you're just going to focus on being a dentist and like focus on building your business, the thing that's actually going to build you wealth that then eventually will allow you to store your energy, via money or capital in other sources of income. And what I'm talking about specifically that's so pertinent to dentists, and I can say this because of all the dentists I talked to over the last 7 years, so many dentists are rushing to focus on, let's be honest, real estate being the number one thing. But it's just distraction. Like I'm rushing to be distracted because I don't want to focus on the actual thing that's going to make me more wealthy and better, which is myself, my own skill set, my own practice. So I love this idea, Jordan, of saying, how about we don't add things this year? How about we cut things? How about we don't say yes to things, focus on what we're going to say no to, and just see what happens? I think it's a perfect topic to bring up.
Love that summary. Honestly, I have nothing to add from that. The principle at play, if I were to summarize this, is maybe choosing what to opt out of could be more valuable than choosing what to opt into. I think it's easier to opt into too much. It's harder to opt out of the things that we actually need.
Love that. And sorry, just really quick. I think people fail to think about the opportunity cost that comes from distracting yourself with other things. Meaning, like, what are you, like, again, this trade-off idea, by going out and trying to find other income outside of your main source of income, what is the cost there? The opportunity cost is you don't even know what would be happening with your main source of income if you just put your focus there. Or, I don't know, time with your kids, time living your life and enjoying your life. So there's a whole multiple conversations here because there's a lot of threads we could go down on this road. But I love that you set this up for the new year, Jordan, because this could be something we talk about multiple times throughout the year. Rabih, any final thoughts, words of wisdom?
No, I
He's like,
really
"No, I'm
love
good."
what you guys thought.
Figuring out how to get that Bitcoin. That's what he's figuring out.
Rabih has been writing frantically about, he's looking at his screen, mapping out like where to go to this landfill.
You guys know my take on Bitcoin, but yeah, it's just that really how much input we put into a certain outcome really isn't the only thing that will bring, hold on, let me say it in a better way. Our input is really insignificant in the magnitude compared to the other factors that get us there. But you have to plant the seed. And this is what it's all about, whether it's an investment or with the resolution. And starting from that perspective takes actually the pressure off your shoulder. Like, you do what you have to do and let external forces take care of it. And then if it happens to be in your way, good for you. And just, there's no pressure to force the outcome.
Yeah, love it. I'm going to ask listeners out there, if you like this conversation, you could possibly like meeting us in person, chatting with us live, hearing incredible speakers beyond this crew in a beautiful place called Park City, Utah in the summer. It's a hunch. Do you guys think that's possible, that some people out there are thinking that?
Yeah, I mean, we
Yeah,
didn't sell very well at the beginning. You didn't sell our faces very well, Matt.
Yeah.
But they can get voices. Yeah.
No, they're going to come and see if, do these guys actually have a face for radio, or are they better looking than they say? I don't know. If that is the case, we are having our second annual Dentist Money Summit, June 20th and 21st in Park City, Utah. Same place, new speakers. It is honestly going to be incredible. We are well ahead of where we were last year as far as attendees go. I'm not going to sit here and pull this like, oh, there's only a few spots left. But it is filling up. It truly is. We are well ahead of our attendance numbers as last year. So we expect probably close to double, if not more, what we had last year. So if you have any interest in coming, listening, the theme this year is planned for the present. It is going to be an incredible experience. It is beautiful in Park City, Utah. If you have any questions or want to look more into it, dentistmoneysummit.com. Please check it out. We'd love to see you there. Jordan, Rabih, thank you so much for being here as always. Everyone, thank you for listening. That was our 2 cents. Till next time, have a good weekend, everybody. Bye-bye.